Follow this one simple rule to save yourself thousands of dollars across the course of a year if you can follow the patience and the discipline to follow through with it. Looking at the charts here, this was just a gross day of price action once again. We're looking at ES here on the 2 minutes just so I can condense all the candles here. Because if you go to the 1 minute, I got to squeeze them all pretty together to see how tight this range really is. But just not my cup of tea. So the one tip I would give you is box off your opening range high and low. I don't normally have them colored like this. This is just to make it easier of how to visualize where you don't want to be trading and where could be potential safe areas to find your trades. Now, first of all, this is on ES. The one view up that I'm using is the New York view up anchored from that 9:30 New York Open. I've made plenty of videos about it on this channel, but look at the slope of the New York view up. What is it really telling me of who's in control? It's really just flat. Obviously, it's matching the price action, which is also flat. But that right there is just a clear sign that there's not trend in the market, not one direction clearly in control. So until that could really start to arch in a specific direction, either higher or lower, no one's really taking that control and running with it. So I don't really want to be playing on either side of the market necessarily. But if you look at this opening range, anything within this red zone, which is those first 15 minutes high and low of the day, it's just dangerous to trade as of lately, more so than ever, because you're not getting much follow through. That even when we had a break of the open range high here on stream, looking like the buyers were finally going to break us higher after holding all of this support down here, right? Sellers just could not move us lower. We finally get a break for a new high a day. What does it do? Right back into the middle of the range, right? So I made another video about it, but one thing, break of the open range high is not quite enough. I want to break outside, but also be staying outside of that range. So the fact that we came right back inside, I'm not really interested in buying it, hoping that this is a higher low, right? Because we could argue and we could see that there's higher lows on the bottom. There's the new higher high potentially. Let's go get the next higher high. You could definitely go and try to do that. But when you're in this range again, it becomes a little bit more risky. So I think if you could wait for it to get outside the range again, telling you buyers are strong enough to do so, that's where you'd be looking for longs, aka why I boxed off this zone. And it's not this specific. It's just anything outside of the opening range, right? Higher and lower. You can zoom it out like this. But if it's in that first 15-minute range, it's very tough to time. And same thing, outside the opening range, well, let me wait for a pullback and I'll short it. Well, the pullback comes right back inside the range, so I don't want to be shorting it, right? If we can get a new low a day outside of all this chop, then I will look for trend continuation and I'll be trading the pullbacks on the way down. But there is no strong trend. So let's rewind this here and actually fast forward hit to see what happens next. Well, there's finally the break. New high a day was not made despite maybe holding all this support down here. Buyers didn't have the strength to go line up with that 15-minute trend. So now, outside the zone, we could be very hindsight biased, but we're not going to do that here and say this was the trade to be and that was the clear short off New York VWAP. Sellers are in control, go short it. But why didn't we do that back here or back here or any of these same prices throughout the day? That wasn't a good sell price. So it's going to be very tough to say, in all honesty, that you should have sold it here because it's the same idea as it was 2 or 3 hours ago. But ideally, you'd see this break, and then let's see if we can get a substantial pullback to get involved in the shorts. Not really. It just really moved lower for a new low a day, and then the pullback comes, but there's no another extension lower for another new low a day. It actually came right back inside the range a little bit. So I think it's just very tough because it's also very late in the day at this point. That this is the whole day's price action, not really giving you many opportunities to capitalize on the trend outside of the range. It was really just in this one move, and it didn't sustain to make another leg. So I personally think there wasn't really much to do. I'd love to give you guys a trade on here and say this is what you should have done today, trade-wise, but I think more so it was what you shouldn't have done today, which was try to chase the longs, try to chase the shorts. They just become very tricky when you're inside this range. Let's go over here. One thing first off, we had a midnight price above us, which is the, it's the gap fill report. Looking at the gap fill from yesterday's high, right, or yesterday's close up here, there was an 80% chance or so of that wanting to be filled, where if you measure where we opened up the day down here to that price, 0.3%, we could look at that of going to the gap fill report here on Edgeful. We'll filter it by size. You can do it by weekday, by close, by spike, all these different things. But by size, 0.32, you can see here, when it gaps down like we did, 83% of the time, 10 out of the last 83 of these gaps have been filling. So I think it was really strong target above you saying, hey, we probably want to move higher to go fill that gap. 83% of the time in the past, it has gone and filled that gap at some point in the day. So that definitely kept you probably looking for some nice longs, but it did not fulfill. And that 83 isn't just coming off of a low sample size, it's 10 of 12. So really, kind of surprising that the gap didn't fill today, but it also has been very, very bullish for a very long time. I kind of thought a bearish day would come at some point, not necessarily today. Let's go over some examples here. Same idea. Here's another example of just bear price action on a random day. Box off the open range high and low. Don't want to be trading inside that red, right? Where does this want to go? Does it want to go higher? Does it want to go lower? I could have longed it here. Doesn't extend. Comes back to the bottom of the range, but I don't want to be selling it there. Now we're right back in the middle. What do I want to do here? Could I buy it and maybe not say luckily or fortunately win? But could I buy it here and win, right? Measure these higher lows on the bottom? For sure. It's never going to be impossible to predict. But what's the safer thing to do? You let it clearly break out, right? Here was that potential money long you could have made there if you longed it. No harm, no foul. We missed that boat. Wait for the pullback. Get on the next train. You missed that move. Let it pull back. Get on the next train. There's plenty of opportunities as the morning and the afternoon develops. Once trend starts to set in, obviously the markups we just went over of today, the trend never came in. So the opportunities never came. But for the most part, if you can just stay patient inside this range, you'll notice that by the afternoon or even late morning, trend often does set in. And those are the times we want to be capitalizing it on, right? So I could extend this green zone all the way up here. It's really just saying anything within this red, dangerous to want to trade, and it almost becomes easier to trade when you're outside of it anyways, right? Because I don't think anyone's looking for shorts up here when there's some people saying this looks bearish or bullish. Well, if there's a potential argument on it, it's not maybe the clearest then. But the easier trade is going to come later on when the trend is easily visible. Let's look at another example here. 15-minute open range is set. Like I said, it's one thing to break outside of it, but we got to hold outside of it. I want to be physically buying it or selling it outside of the range, right? So if we could have extended and retested above, cool, I'll look for a long. Same thing with this short. If this could have extended lower and pulled back, I'd probably be looking for a short on the retest and the pullback back down. But it came right back inside the zone. So do I want to sell it here? Do I want to buy it here? And again, like I mentioned in the very beginning of the video, where's the slope of the VWAP? Just moving sideways. No one's really in control, as price action is clearly telling you. So just let it pick a side. And then now the answer to the test is almost more obvious and you know it. Okay, buyers took control. And this is what I'm saying of, it's one thing to break outside the range. I want to still be buying it outside though. I don't want to be buying it when it's back inside. Once it gets out again, okay, I'll buy it there. Then the trend sets in and you could buy it. Let's say you missed that one because you're like, it might still be on the top of the range there. I'm not sure if we're really out of it. Makes another new high, pulls back. You can get the next high day VWAP break. Maybe there's some even small high day VWAP breaks within here if you really want to take those. But more realistically, this move over here. So if you could just wait for this opening range to pick a side and stay outside of there for a substantial amount of time, just read and react to the trend. Today's an awful example of trend didn't set in, if you want to call it trend, until 2:20, right? So we have an hour and 40 minutes left in the day, and this is really just kind of straight down. And then after that, it was just rallying in power hour. We could even go to the 1 minute, right? You could definitely have an argument to be made that there was some short opportunities in here on a small pullback, right? If you caught that pullback, selling it there, you'll eventually get that little pop. But realistically, it was just sinking, and then turn right back around. So a very ugly day. Hopefully you did not blow yourself up. Again, I made plenty of video about it last week, so definitely go check those out. But same thing. If you zoom out, it's only Tuesday. Let's go to the 15-minute on a different chart here with not crazy amount of drawings. So let's go to the 15-minute, and you could see we're early on in the week. We have plenty of opportunities to find. It was the same lessons last week when we had that ugly Wednesday. We might have 2 opportunities of chop, but Monday was clean last week. Tuesday, Wednesday was the no-go day. I made a big video about that one. Definitely go check that out. Thursday was clean and Friday was clean. All right, well, yesterday, Monday was clean. Tuesday might be our one and only. Maybe there's 2 this week. Ugly day to take a break, pause, don't slam it, don't lose your accounts, don't go on tilt, because then tomorrow, if it's clean trend again, we want to be able to capitalize on it and be in the green, not be making up losses from poor trading today, right? Notice the difference of the clean trend continuation and today's just chop. This is a day to survive. This is a day to try to make a lot of money. This is a day to try to make a lot of money. This day as well. This day, don't lose your whole account. It's really it. And you zoom it on out of the next, I'm not going to make it up, 100 days, There's going to be 20 of these X's and 80 of these check marks. Who the hell knows, right? But just stay small on these choppy days. Don't try to expect trend to set in every day and just rip every day, because it's not going to. We can zoom back even more and find plenty of consolidation days where don't lose your account on that day. Don't lose your account on this day, but make money to the downside on that day, right? Who knows? So just stay alive for the trending days. Capitalize on those. Read and react to VWAP outside of your opening range. And I hope you guys found value in that. And hopefully you guys are always sticking with this 15-minute analysis as well to keep your side of the trend nice and clear. But always feel free to reach out if you have any questions. What type of videos you guys like to see next? Top One's running their sale right now. So if you need an account, unfortunately, because you're trading crazy on these choppy days, I feel you. But they're running 40% off right now with code Evan. It's always going to match their best deal. So go check them out. I'll see you guys on stream every morning, 9:30 at the open on ASFX TV. I'll see you guys on the desk tomorrow morning.